this chart is a chart I've not seen anywhere else. And that is the chart of the balance sheet, which is in white, versus in gold, it's the interest payments on the debt. This is the future use of the balance sheet, potentially matching the interest payments to come. You can see the massive spike that was due in 2025. Those are the payments from the pandemic period. So it looks to me like there's a lot of debasement to come. It says the balance sheet gets to $12 trillion. I actually think it goes higher because I think some of the banking crisis gets tacked on. So I'm looking for something like $14 trillion from the balance sheet.
Renowned macro guru Raoul says the much-awaited crypto summer, a period of rising prices and overall outperformance of cryptocurrencies compared to other asset classes, is closer than many people think. During this period, which Powell believes could have started already, the Real Vision founder and chief executive expects cryptocurrencies to outperform almost all other asset classes, including bonds, equities, commodities, and real estate. The only other thing Powell predicts will perform as excellently as cryptocurrencies is technology. According to Powell, crypto and technology have secular adoption cycles, which happen to align perfectly with one important event which, according to Powell, is the main driver of asset prices globally. This important event is the cyclical debasement of all of the world's fiat currencies. According to Powell, an important trend started during the global financial crisis in 2008 when all interest rates went to zero globally. He describes that event as a great reset that gave the world's central banks a sort of fresh start on their rapidly piling debts and interest expenses. Powell believes the events of that year also began the current 3 to 5 year economic cycles, as most central banks put off paying their interest expenses until 3 to 5 years after the crisis. Powell believes this has been the trend since then, and we are almost upon another period of rapid currency debasement as central banks print more money to service their debts. Powell is not the only analyst that has pointed out the correlation between increased global money supply and rising asset prices. It is a well-established fact that an increase in the global money supply causes a corresponding rise in asset prices. As an example, this is a chart showing the correlation between the global M2 money supply and Bitcoin price. However, Powell has taken it a step further by analyzing the behavior of central banks, especially the world's major central banks like the Federal Reserve, the European Central Bank, Bank of Japan, Bank of England, and the People's Bank of China, the major contributors to the global money supply and liquidity trends. According to the former Goldman Sachs executive, these central banks are either already pumping money into their respective economies or are about to begin. Within the next 2 years, Powell is predicting that the Federal Reserve's balance sheet, for instance, would have climbed to over $14 trillion. Such a spike in the Fed's balance sheet will of course spill into the markets and contribute to massive price gains. But for crypto, Powell is predicting an amazing outperformance of both the markets and the Fed's balance sheet. We will now bring you clips from a recent video broadcast from the Macro Guru. But before we do, please take a little time to like this video, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. It all contributes to the channel's growth so we can continue to bring you these videos. Thanks and enjoy.
My hypothesis, and you've heard me talk about the everything code, is that debasement of currency is the main driver of asset prices globally. Currencies are getting debased by excess printing. We all know this from crypto, that if you have too much inflation in your money supply of a token, it tends to go down a lot. And that's the same with currencies. But all of fiat currency is being debased, and that's driving the reserve currency of the dollar to get debased against asset prices. So optically, it makes things like the S&P 500, property prices, gold prices go up. But once you divide them by the debasement, or even just use the Fed balance sheet as an easy approximation, what they tend to do is operate in line with the debasement, i.e. they're just holding water. They're not making you wealthier. There's not much of an investment. It's kind of like a bond of old. But I found in my work that two things really outperformed: technology and crypto, because they've got secular adoption cycles too. Okay, so where are we in the liquidity cycle? You see a lot of noise on Twitter because everyone's starting to pick up about this liquidity. Again, I'm using liquidity here as a proxy for debasement, not just pure liquidity. I think that's less relevant. So the GMI weekly liquidity index, year on year, bottomed exactly when ETH bottomed in June. That was the first signal to me that something has changed. So that got me focused on buying ETH. Then we saw the non-confirmation of ETH when Bitcoin bottomed in November. That was really interesting to me. And that coincided with ongoing increase in liquidity. If you remember, it started with the Bank of Japan. They started printing money to buy JGBs in a process called yield curve control, expanding their balance sheet significantly. That was then followed by the Bank of England, who expanded their balance sheet to try and bail out some of the pension system and also kind of stop their bond market getting out of control. The Chinese have been slowly debasing their own currency by a slow crawl of debasement. And then we saw the US come in March when they had to quickly inject money into the banks, which they've been drawing out again. The trend is higher, but too many people get fixated on the next chart, which is the overall trend itself, not the rate of change, which is more important. But the overall trend, well, that is the same trend as most asset prices. And that's because debasement is lowering the denominator. So what we saw is that massive rise in liquidity that happened, or debasement that happened in 2020 and 2021, and that some of that got withdrawn. But we're back basically to the long-term trend where we've been crawling for a while now. So we're not seeing a massive shrinkage in the balance sheets. We're seeing some expansion, which is what the previous chart showed you. So that's what's driving the market higher, much to everybody's chagrin. Now, remember, a lot of people get confused about this because everyone's using different measures of liquidity. Our measure is G5 central bank balance sheets, maybe G6, and then we use a kind of net liquidity for all of those different markets, combine them into one super index, and it gives us like a 97% correlation with the NASDAQ. So it's a very good approximation for what's happening. Other people are just using Fed net liquidity. Now, that's useful, and we'll come on to that in a bit, but it's not everything, and we're starting to see divergences of things like NASDAQ from that. That's normal. What we find, and crypto will do this a lot, it will diverge from liquidity enormously because that's the bull cycle. That's when adoption goes through the roof and speculation goes through the roof, and you get the massive outperformance versus liquidity. We should expect that. If it doesn't, then it's not going to outperform the balance sheet. Remember that, right? So we're expecting to see that phase.
As Pal has established with his stellar analysis, investing in Bitcoin, Ether, and other promising crypto projects is a wise decision, especially given the current economic conditions. Not only is crypto one of the two asset classes that Pal says are actually outperforming the Fed's balance sheet, but is also an exit ramp and insurance against the rapid currency debasement, which by all indications about to worsen terribly. Within the next 1 to 2 years, the world will really begin to feel the impact of the reckless money printing carried out in response to the COVID-19 pandemic. Let's get back to Raoul Pal's broadcast as he further analyzes the situation and what it means for cryptocurrency prices.
So what is this balance sheet expansion all about? This chart is a chart I've not seen anywhere else. And that is the chart of the balance sheet, which is in white, versus in gold, it's the interest payments on the debt. And it's lagged by 36 months or leads it by 36 months. What it's telling you is that for some reason, all interest payments from 36 months ago are being paid for by debasement, i.e. they basically put them on the Fed balance sheet in quantitative easing. So what is this all about? This is to do with the Great Reset. One thing that everybody expected was a Great Reset. Well, I've now realized it happened. It happened in 2008 when all rates went to zero globally. And that essentially allowed everybody to reset their debt payments. Okay, that's like a debt jubilee. You didn't forgive the whole debt, but you basically forgave the interest payments. And everybody rolled their debts 3 to 5 years. So now we have a concentration of all government debts around the world in this 3 to 5 year sector, which every 3 to 5 years gets rolled. And that is leading to a cyclicality in the economy, that it starts slowing down because the interest payments become due, the economy starts slowing down, and eventually the central banks monetize those interest payments from the previous cycle and roll over the debt. I'm expecting the same again. And that would give us this chart. This is the future use of the balance sheet, potentially matching the interest payments to come. You can see the massive spike that was due in 2025. Those are the payments from the pandemic period. So it looks to me like there's a lot of debasement to come. It says the balance sheet gets to $12 trillion. I actually think it goes higher because I think some of the banking crisis gets tacked on. So I'm looking for something like $14 trillion from the balance sheet. Let's not get caught up in the exact projections and the exact maths. It basically tells us there's more balance sheet woes to come, more debasement, and that's very good for crypto. It also proves out the case why we need crypto, the broken financial system. Now, if you remember, Bitcoin was launched in 2008, 2009 period. That is the same period when interest rates went to zero. And guess what? The halving cycle is exactly the same as the economic debt payment cycle. They're all the same thing because they were all born at the same time. So that, I think, is the big driver. The macro is the big driver. So when we zoom out, we look at the Bitcoin chart on a log scale, and you can see the trend rate of adoption over time. The acceleration is when the balance sheets start getting used and people start putting money into the space and the space grows over time. And we will see that ongoing. So the total crypto market cap hit 3 trillion at peak. What will it be at next peak? Probably 10 trillion. As more money comes in, more people stay in the system and opt out of the old system, or find new uses and applications in a Web3 world that makes the internet just better, fairer, and more democratized and more decentralized. But that trend rate of Bitcoin, well, we got in that beautiful cyclical low the buying opportunity we were all looking for. People are still arguing whether it's going to go lower, etc. The probability is it put in the lows and now we're on the upcycle. And it's what I think is the start of crypto spring. I think we've been through crypto spring and we're going to be moving into crypto summer.
Raoul is predicting that the lows are in for Bitcoin and other crypto assets, and crypto summer is almost upon us. In a previous interview, Powell predicted that the next bull market will take Bitcoin to between $138,000 and $200,000, 2 or 3x its previous all-time high. That would be an increase of 350 or 550% from current prices. He also predicted massive gains for Ether, which he says could hit new all-time highs later this year, and Solana, which he believes could go another 20x from here. What are your thoughts on Raoul Powell's analysis and prediction? Do you agree that the lows are in and we are heading for another strong crypto summer? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos featuring insightful analysis and strategies from some of the industry's brightest minds. Thanks for watching.